The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, as we settled the markets on Friday and headed into the weekend, we found a little bit of pressure post-October WASDE report, although at first glance, we didn't see that much in the way of changes on the numbers from USDA. We're going to take a look at the report and look at the market action, grains, livestock, energies, etc. here as we closed out the week. Joining us for analysis today, Christy Van On. She's with Van On and Company. Christy, thanks for being with us here for a report recap episode of the show. Appreciate it as always. Hope you're doing well.
I am. I appreciate it too. So
I felt like, honestly, at first glance, I could have slept through the October WASDE report. It didn't feel like there was a whole lot on the surface anyway that was of note, I guess I would say. Would you agree? What did you see at first glance anyway, Christy?
Yeah, I really could have used a 3-day weekend. So if we could have just bypassed this whole thing, taken the day off, I would have been okay with that. And that's pretty much what happened. I think that it's been hard to sustain rallies throughout a week. And so I think just coming in on a Friday, especially for corn and wheat that have had successful trade this week, for them to carry through, I think that's been a little bit problematic. But the report came out, and I think initially you saw a wave of buying come into corn just because it was under 2 billion bushel carryout. So 2 billion bushel carryout seems to be that magic number that anytime it doesn't start with a 2, you find those buyers come in. Well, it was 1.999 billion bushel carryout. So yes, it's under 2 billion bushel, but barely under that. And so I think you initially saw that, but then I think people kind of checked the numbers and was like, whoa, USDA increased corn yield, and just brought that wave of selling pressure down on the market. We ended up being able to kind of find our way around it. So they increased corn yield, decreased bean yield. And that's one that interests me because I feel like maybe there could be more bean yield loss to come. I'm not so sure about corn. I felt like that corn number that we had in the previous report was the highest yield we were going to see moving forward. So, I mean, I'm not anticipating a lot, but I think that beans, just the way I've been talking to individuals in so many areas, that they've been really disappointed with their bean yield. And you know me, you know that I have not been a friend of beans for quite some time. So this does not mean that I am friendly beans by any means, because we would need to see some drastic changes to really change the fundamental story for US beans. But I do think you could see it come down. I don't know what you've heard for bean yields, but I'm talking such large areas. Indiana, you talk about the yields are big in Iowa, but just how dry they are, that's weighing on them. But I have heard like crappy bean yields in Minnesota, North Dakota, and South Dakota. And the worst part is, I think that majority of those people were going into that field with very high hopes. And I feel like that is just salt on a wound when you have those high hopes. It's one thing to know you're going to get a bad bean yield, but to not know it and get in there. I've seen anything from like 5 to 7 bushel off what they were really expecting to see for a bean yield. So I think that could come down. I think you saw the hints of it. USDA has started to acknowledge the downtick in yield for Indiana. And we have to remember they kind of find this yield the last week of the prior month. So this last week of September, they were calculating yields, production, all their ideas. And so they're finding that number. I think you had that early set of bean harvest in Indiana. We're able to get going on early stuff in Indiana, Illinois, parts of Iowa. So I don't think they've really been able to get into those actual yield counts from farmers right now for Minnesota, North Dakota, and South Dakota. So I could foresee that happening. Minnesota has been such a hot topic for me for so long. Obviously, I live here, right? I've traveled here a ton. I've talked about the disaster areas that we've had throughout our state. And USDA just has not acknowledged that yet, which surprises me. So for like the corn market, for example, Minnesota last year was 185 for a yield, and they just started to down ticket a couple reports ago, and we're 183. And I haven't really heard enough corn. I think the early corn is good in Minnesota, so I don't know about that, but I just think the pockets that we've had, you're going to have those issues. But then when you flip over to soybeans, last year for Minnesota, we were 48, and they have us forecasted at 48 again. That's actually down a bushel on the month compared to the September report, and I think that is greatly overstated. I just don't think those yields are there, especially for southern Minnesota that can pull the yields for soybeans and do really, really good soybeans. I just have not seen those yields yet. And then you get into the Dakotas, and same situation for the Dakotas. South Dakota right now, USDA is thinking they're going to be up 3 bushel on the year. I'm not envisioning that. North Dakota, they're expecting it to be up 2.5 bushel on the year for soybeans. And I think there's been a few pocket areas that have showed some good yield for soybeans in North Dakota. Other than that, I've had most people disappointed.
Just when I thought we weren't going to have enough to talk about today,
I'll take a breath.
I'll let you take a breath here. I'll say to that, I was at Fargo this week for a few days. I've heard some of what you were alluding to there. Yields not looking too good in some pockets in the Dakotas, Minnesota, and yet you bring up those state-by-state numbers here, and you had mentioned this on your X Twitter account earlier in the day, Friday, but I find it interesting that some of these yields, South Dakota, North Dakota, left unchanged for beans. Minnesota was down 2%, but still, that's not a lot. I mean, I'm kind of in the camp with you here. And so I wonder, with all this in mind, I mean, is there something here? Is USDA not finding the story? Are they not wanting to put the, story out there now? Are we seeing any of these poor yields being reflected in basis in the Northern Plains, Upper Midwest region? I mean, what are your thoughts, Christy?
That's what I was going to touch on, is that it's one thing to hear some poor yield reports, scattered around, right? Every year you're going to hear that, right? But it's one thing to hear it from a lot of people and it matching what you're seeing on the basis side of things. So there was actually a big processor in southern Minnesota post-report that narrowed up their basis 15 to 20 cents after the report right away. I think that that just shows you they're not going to get those beans. Obviously, once again, southern Minnesota, I just don't think those yields are there for soybeans. So that's why you're seeing that push there. But honestly, we've had favorable basis levels through Minnesota into the Dakotas for harvest delivery. I really thought that you would start to see that widen out, and maybe we still can, right? Because I feel like there are some guys that are wrapping up beans right now and bringing those last bushels to town. They put everything in the bin and then bringing those last bushels to town. There's also, you're going to get those 14 days before you have to price it in most locations. So I think that some guys are waiting those 14 days out before you have to price it. So maybe that's when we start to see basis widen, and maybe we don't. But there is a big processor in North Dakota that has sent out multiple emails here this week saying, hey, we don't have any lines, come deliver to us. We're narrowing up our front month basis. And you've had many locations come in here and say, hey, there's good carries in the market, but I'm going to take that away because we need the beans right now. And so what they're doing is narrowing up that front basis, widening out that deferred basis, so your cash price is flat for the next 4 to 5 months, and trying to get a farmer to look at it and say, why am I going to store these beans if my cash price 4 months from now is the exact same as it is now, especially if my beans are dry? Do I really want to be touching those beans a whole lot when they're as dry as they are? And so I think that the basis is really matching up on that situation really closely. Here's my issue that I have, is that beans in the big picture of things are unfriendly. You're getting rains in Brazil. We have a big carry out. And so it's hard for me to say I'm friendly beans, but I will say that as a firm, if we get probably like that $9.90 to $10, we're going to start looking at some call spreads out to the May to July timeframe for soybeans. And I think a lot of that just has to do with how aggressive we have been on marketing. We are 80% marketed on soybeans, and we don't have a lot of ownership on. And so that is kind of our target, to say, hey, let's inch and put our foot in the door in case you start to buy that hype of the yield not being there. And then you pair that hype of the yield not being there with what if you get dry in Brazil again? I mean, they're just planting right now. There's so much left of their season. So we'll probably look at those areas. It seems like buyers came in decent whenever we kind of broke down. I'll be interested to see how beans handle $10, but that's kind of our target, to look at some ownership if we can get there.
Christy Van On Cheeses with Van On & Company, our guest analyst here today. on Market Talk, recapping the October WASDE report and more. I will say one thing on corn here before we jump over to wheat. I feel like as I still look at things and watching the WASDE and the charts and everything, I just feel like corn is still going to kind of hold range bound here. I don't see much changing this corn market in the short run, Christy. Would you agree or not?
Yeah, I don't think so. And if anything, I lean a little bit on the friendly side in like a month from now. So seasonal tendency is to drop off pretty quick in corn. So that's a concern of mine that you're going to get into harvest. You're going to get some bushels going to town, that selling pressure from the farmer. So I'm a little bit concerned about that. But the bigger picture, there's a couple reasons why I'm a little bit on the friendly side for corn. Is one, demand has been fantastic. We had a great private sale this morning in corn to an unknown destination. Typically that is China. So if China is buying our corn, that's a really good thing to see this market do. Two, I'm really friendly wheat. I think that there's a lot of dynamics around the world right now that could give wheat some premium. It's so dry in winter wheat country. It doesn't seem like that's going to really ease up anytime soon. I think, I watch Eric Snodgrass every morning on his weather commentary, and I think he lays it out really well of some of those concerns about staying dry into winter wheat country. And so that's one thing that I think could be friendly wheat. And so I think friendly wheat story is a friendly corn story, to be honest. And a 1.999 billion bushel carryout sub 2 is a manageable carryout for corn. It's something that we can work with. And corn has obviously a growing season in Brazil, but it's a delayed growing season, right? That second crop in Brazil is the big one. Mm-hmm. So we really don't have much of a threat to that new fresh crop coming in for a while, where you're starting to plant that right now for soybeans. So corn, I think you could range bound to slightly higher, but that being said, we moved on marketing over the last couple of weeks as well. We looked at 445 January puts. That was a strike level that we really enjoyed. You capture the carry by going out to that January put because it's off of March futures, and corn options right now, whether it's a put or a call, are dirt cheap in my opinion. And so we did move on some marketing via that. It gives flexibility to a producer. And I do think that the December timeframe could be favorable for basis levels. So that put kind of times up nicely with that, in my opinion.
Talk to me about the wheat trade a little bit more. We saw a little bit of shuffling around with some of the numbers, ending stocks domestically, global numbers. The Russian Ukraine crop or European Union crops came down. The Ukraine crop went up a little bit. Net, all in all, you mentioned some of the dryness in the plains in HRW country, dryness in the Black Sea. It just feels like net, not much for the wheat markets, at least on this WASDE report, Christy.
Yeah, they had little changes here and there, like you said. Yeah. And to be honest, the carryout level for the U.S. is nothing. It is not friendly, right? It's a decent sized carryout. So you can't really look at that necessarily and say friendly. It's the issues that you have on around the world, the thought of the dry concerns moving forward. And to be honest, I'm real curious to see moving forward how we can get some wheat acres, because you're looking at a farm community that is really tight on cash flow right now. I've had multiple bankers be talking to them and pushing them to be planting some beans next year when they're trying to plan for it. And I think it's tough because a banker's looking at these balance sheets and saying, hey, it's got the least amount up front. Let's be planting more bean acres this year. And then you have a producer. And honestly, it's also where my logic is that why not take the gamble on corn, because the corn can use those yields, right? I know that it's heavy up front on the cost, but you have a better chance. And I think everyone likes to grow corn. I think you look at wheat and have similar things of saying, hey, this is kind of expensive and you're having so many issues with quality lately on wheat. You're getting docked for this, you're getting docked for that. And so I think that you could potentially just see the interest in wheat planting be a little bit lower as well. Especially if you're dry. Do they want to be spending all that money putting something into really, really dry dirt? So I think those are all questions that could support wheat down the road, first quarter into 2025. And I just think that wheat would be a good buddy to the corn market as well.
I'll mention cotton briefly before we talk cattle. The report on Friday morning and did include a production forecast for U.S. cotton. All cotton production, 14.2 million 480-pound bales, down 2% from the previous forecast, but up 18% from last year. I know we had some challenges last year, of course. Cotton market down slightly Friday. Just didn't feel like it felt like a non-event there as well, Christy.
Yeah, I wanted to be a buyer of cotton for quite some time. Like I love me some cotton. I think that the statistics are there to be a buyer of it. I would wrap it in with the wheat as being one of those first quarter friendly markets if we could get through some resistance points, but it is not moving. It is not getting through these resistance points. And we hit a huge setback here earlier in the week. I think when you came out and you had some Chinese officials just be like, don't envision more stimulus to come. Like, they were kind of hinting at that, like what they did was what they did. And that market just it took the steam out of so many markets because I think people were expecting to see some more funds coming into these Chinese hands, and they're saying they're not going to see it. And so you saw those big drops in crude oil, you saw the big drop in cotton. And that's the big thing that scares me for cotton is that we do need China. For the most part, we need to have them have a strong economy. And so when you're having these concerns, it's going to be a little bit tricky for cotton to make something of it. But I would lump cotton in with the fact that it is so dry in those areas. And the forecast, if we do switch over, is not a favorable forecast for the moisture in those areas. And so I want to be a buyer of cotton, but it's got to get through a resistance point first. And it just hasn't proven it's able to do that yet.
All right, let's talk livestock. We saw a fairly blah end of the week. Cattle, a little bit of pressure. Hogs tried to firm up, and in terms of the WASDE numbers too, sometimes we forget that there's some WASDE numbers for the livestock side. It seemed like the report was supportive for beef and cattle, kind of mixed for hog and pork. Your thoughts overall, cattle market wise, what's your feeling right now as we kind of settled up the week on a quiet note?
Yeah, you've pushed so hard on both live cattle and feeder cattle charts that it's been really impressive. And it seems like we're starting to run out of a little bit of steam here and consolidating. So we moved on marketing. We have just been moving on a bit of marketing here lately. We moved on some cattle marketing. And I think one thing that was really interesting is when we started to pull some numbers and pull some lines, there's a lot of upside on the chart for feeder cattle yet, which surprised me because I kind of felt like we were running out of steam. But if it can get to these top side, there is actually, you're only hitting that first price count, which, you look at live cattle and you're on your second or third price count. So it's a different story. And I wasn't expecting that until I looked at the chart. So that did surprise me. It does feel like we're running out of a little bit of steam here. So it'd be nice if we could see some cash trade follow suit. I do think hogs are really surprising to me right now because cash is just not all that favorable. We had monster exports, so I can get where that's supported. But for the most part, I feel like it's a little bit surprising that hogs are as supported as they are right now, given the cash trade is not all that great. So it'll be curious to see for me what happens when that October comes off and we move over to December. Are we going to see that difference there or not? So I'm actually a seller of hogs right now, whether that's buying a put, some sort of way of adding some protection into hog marketing. We moved on hog marketing actually today. Cattle was over the last few weeks that we've moved on that. But to me, I think protection is warranted here for cattle just because it's just not matching up with cash trade in our opinion.
I'll throw this in there too. And I know you mentioned crude oil a little bit earlier. We had a fun week in crude. We're hanging around $75 a barrel. Stocks were up a bit on Friday. The producer price index came out. That was flat month over month. Gold up over $30 an ounce on Friday. Anything in that macro energy picture? Anything else you'd want to touch on there, Christy?
Yeah, if I were to pick three markets for first quarter of 2025 that I think could be supportive if things lined up together, wheat, cotton, crude oil. So crude oil is also one of those markets that we're looking at that we'd like to get call spreads on. We have not started with that situation at all, but that is a market that we're watching really, really closely. And if somebody said to me, hey, I want to buy crude oil right now, whether that's a micro, whether that's a mini, whether that's a call, I wouldn't buck them on it. I would be there and say, yeah, I don't disagree with that. I think you could warrant that. I think there's so many world dynamics going on. And we have to remember that, just a few weeks ago, you had Israel talking about the potential of hitting Iran's oil reserve as retaliation. And anytime you get into that kind of story, I'm sorry, I'm going to put a little bit of risk on the table and just say, I'm going to just cover this in case something big does happen down the road. we're up $7 or so on the month, pretty flat overall in the week after having that really bad day with the Chinese news. But overall, I think it's enough risk on the table worldwide to be looking at some sort of option to cover some topside risk.
Good stuff as always. As we close it out here today, folks want to reach out to you, talk risk management, work with your team, and more. How can they get in touch with you, Christy?
You can call us at 1-800-648-5494.
I know they can find you as well online, vanonco.com. Christy Van On Cheeses with Van On and Company. Thanks for joining us on Market Talk today. Always a pleasure. Have a good one. We'll talk to you again soon.
I appreciate it. Thanks, Jesse.
Make sure to subscribe to the Market Talk YouTube channel. There, you can watch our latest interviews with the top market analysts in the country, find bonus content, and much more. Just go to youtube.com/markettalkag and hit the subscribe button, or you can search for Market Talk Ag on YouTube.